So what do you do right now? You're rightly saying IT is looking bad. We have underestimated how painful your quarterly numbers are going to be. So what is the strategy right now for an investor, for a viewer who's watching? What's the outcome of everything that you're saying?
So I think, Tamanna, it's not all gloom and doom. Yeah. Let's look at where earnings growth can come, right? There are two sectors that straight away tell you earnings growth, or actually three that tell you earnings growth can come. One is consumer discretionary. I think hotels are still doing well. Airlines are still doing well. Alcobev stocks are still doing well. I think those are three pockets where we could still buy because I think earnings growth is still going to be strong. I think the one sector that has gone into a different orbit in India, and I think that's large part thanks to the Prime Minister and the Defense Minister, is the defense sector. I think if you've looked at the news flow over the last 30 to 45 days, we've had close to about 1 to 1.5 lakh crores of orders that have been announced and awarded. And I think you've seen the defense stocks rally. So that could be potentially another area. And the third is agrochemical stocks. I think that could also have a very good play. I think valuations have reset. I think if you look at names like Sumitomo Chemicals, which we're recommending, I think you could look at 25-30% kind of growth in some of these names like Sumitomo. I think in defense, we have recently upgraded Solar Industries. We like Hindustan Aeronautics. We like Bharat Electronics. You know, I recently met the managing director of a very large, defense equipment manufacturer, and he said the amount of work that they have done in Russia, Ukraine, and Middle East, that when these cities come up for reconstruction, that's a huge opportunity for some of the Indian companies that have done work there. So I think off the bat, defense, consumer discretionary, look like three sectors where we could potentially look at. And in auto as well, I think luxury auto, whether it's an Eicher or companies that are strong, exports, also very large spare part components like a Bajaj Auto. I think those could also potentially be looked at. So it's not like you can't be buying stocks. And I also think mid-cap IT, while the growth rates will come off, I still think there'll be at least 2.5, 3x than what the large cap IT companies would give you. So you could potentially look at names like Coforge if that interests.